You are watching Huskins Forex and Financial Market Brief. For a low-cost trial to premium Forex coaching, click on the link below.
He who chases two hares will catch neither. Hello and welcome to the daily review of May the 14th and the preview of May the 15th. This is Huskins, your Forex mentor, with a daily dose of events that shape the Forex markets. Let's talk about our results. We have one trade which is still going on. The trade is currently at a floating loss of about 20 pips, but the trade is still going on. It could go either ways, and this is the kind of a trade wherein we'd have the stop loss set and the take profit set, and we'll just let it go through completely. Why we are deciding not to exit at 5 p.m. is because of the bigger picture, which I'll tell you in just a little bit. So let's look at the big picture. Let's look at the markets. I'm going to look at the US dollar index. That's the number one, and here we go. This is the US dollar index. Let's enlarge it. Alright, and what does the US dollar index tell us? That the US dollar is wants to go higher. This is the daily chart, so wants to go higher, and that's exactly what this US dollar index is telling us. And today was also an up day. Now, having said that, our trade was to buy the US dollar and sell the Euro USD. So let's look at what happened to the Euro USD. The Euro USD was a flat day. Alright, it went up and down and just did not do anything. Based on the US dollar index, our expectations were that the Euro USD should have a down day, but this had no direction day, and that is the reason why we are still holding on to our short position on the Euro USD. That means a long position on the US dollar. We would have under normal circumstances closed out the trade by 5 p.m. Eastern Standard Time, but only and only because we are in a possible longer term US dollar uptrend. I'm holding on to my position. That's about it. Now let's look at what's happening with the markets. The markets, like I've been telling you, that I expect the markets to go higher, and that's exactly what I'm expecting now. The markets, the Dow hasn't done much. It's just breathing a little bit, but let's see how far can it go higher from this swing low to this consolidation. Okay, let us project that into the future. So it was pretty accurate. Alright, so the movement from year to year is similar to the movement from year to year, and I expect that to be the case even now. So the movement from these swing lows, so I'm going to be expecting the Dow within a few months to be in this particular range, which is 15,750 range. It will take a few breathers, but this is where my target would be. Let's see what's happening with the gold. This is silver. Let me pull up a gold chart. Okay, so gold, again the same thing. We are I have been expecting gold to go lower and lower, and that is indeed what is happening. I have my order sitting at 1,200 long order. I don't expect to be filled in, but in case the price does decide to go there, that's where my entry price is going to be. Eventually we will maybe in July or August, depending on when we get a trade from the commitments of traders, I will go long at a price, but right now my long order is at 1,200. Let's see what actually happened today, the news which took place in the market. This is the US retail sales chart. The one's the US retail sales and one's the core retail sales. And as you can you can see that the expectations, all these yellow lines are all the expectations, and the blue lines are the actual. The expectation was another negative reading, and the actual was a positive reading. That's on the retail sales. So basically, retail sales in the US unexpectedly rose in April, reflecting broad-based gains that may ease concerns that consumers are holding back. The 0.1%, that's not much, but the 0.1% increase, which was followed by a 0.5% drop in March. So look here, in March we had a 0.5% drop, but now we have a 0.1% increase. Beat the median forecast of the economists, which called for a 0.3% drop. So based on this particular news and what's happening with the US dollar index, I'm expecting a surge in the price of US dollars, and that is why we are yet holding on to a short Euro USD trade. Now let's see what else came in today. We have the New Zealand retail sales trade survey. Look at what the expectations were and what was the actual. The actual was less than the expectation. Now, the warmer than usual start to autumn has weakened clothing and footwear sales. This is what when the seasonal effects are removed, shoppers spend 2.4%, that is about 21 million New Zealand dollars less in clothing, footwear and accessories. That's what the retailer said for the March of 2013 compared with the quarter of December 2012. Now, respondents to the retail sales survey told the surveyors that the warm and the dry start to autumn meant that the shoppers were holding off buying cooler season clothing and footwear. Now, what does this mean? That it actually means that they're holding off buying the footwear, but they'll eventually will have to go ahead and buying that. They're not deferring it forever. If colder weathers do come in, then perhaps the retail sales will start increasing also. So it's nothing which is a market shattering or a earth shattering number, and that's what I like to extract from my from the news. I want to see whether this particular news has significantly changed the market perception or the market data. When it comes to New Zealand retail sales, it has not. Let's look at May 14th. I will not be trading the Euro Zoo. This trade hasn't been a winner for for a few times. So, but we yet have the trade plan if you want to have a look at it and make your own judgment call. But I'm not going to be looking to trade this. So that's about it, guys. Have a wonderful day and God bless.